So, welcome to our 2026 Insights, our mini podcast series on the trends shaping sustainable finance. And each episode explores key themes from green bonds to climate adaptation to regulation and nature finance and provides the insights for the year ahead. My name is Tonia Plachitniuk, and today I'm joined by my colleague, Shubha Samalia. And in this episode, we will share our reflections on sustainability reporting landscape. So, in the EU, CSRD simplification under the Omnibus is well underway. The political direction is clear: narrower scope, simpler standards, and fewer downstream data demands on smaller suppliers. The provisional agreement, agreed in December and ratified by Parliament, sets a much tighter scope. CSRD sustainability reporting will now apply to EU companies with more than 1,000 employees and net turnover of 450 million euros, leading to about 6,000 companies remaining in scope compared to 50,000 initially envisaged. Alongside scope, there is also a timing reset under the so-called Stop the Clock Directive. The directive effectively delays CSRD reporting by 2 years for companies that had not yet started reporting. And it also postpones timelines for listed small and medium enterprises. And finally, on the how, the standards themselves are being streamlined. EFRAG, the technical advisory body, has recently submitted its advice to the European Commission on the draft simplified sustainability reporting standards in the EU, which will be the key input in terms of what Commission will adopt next. So, what do these changes mean in practice? On the plus side, it should reduce compliance burden and cost, and it may set the quality standards at the top end because the largest firms tend to have better systems, stronger governance, and more investor scrutiny. And on the risk side, coverage is now much thinner across the mid-market. Investors, banks may lose consistent regulated data points on many companies that still sit in their portfolios and value chains. So we could see more reliance on estimates, voluntary disclosures, and private data collection. And this also means that during the next reporting cycles, we likely see the uneven preparedness. So some firms will continue to press on with their reporting, some will pause, and this will make the comparability in value chain data planning much trickier. But this is the EU. So, Shubha, what is happening globally with the international sustainability reporting standards?
Thank you, Tonia. That was very insightful. And greetings of the day to all our listeners. With respect to international reporting standards, I think 2026 is going to be a critical year. So while mandatory reporting up until now has been very limited, but momentum behind it is building fast. As of now, nearly half of the global GDP, 40% of the market cap, is under jurisdictions which have either formally adopted ISSB standards or are aligned with it. And this sort of create a global baseline for sustainability disclosures going ahead. Many early adopting countries are moving fast. For example, in Brazil, the publicly listed firms for them ISSB aligned mandatory reporting is sort of going to begin from January onwards. UK is formulating its own sustainability standards, which are closely modeled around international ones. For Hong Kong, the climate rules are already embedded, and these are again aligned with the international standards. And enforcement in a phased way is already underway there. So this is around ISSB, but apart from this, there is also a scope extension which is happening for ISSB. If we look at their 2024-2026 work stream, it includes research around new areas like biodiversity, ecosystems, human capital, laying the groundwork for more standards to be coming up in these new areas. Up until now, it was only climate-based rules, climate-based disclosures, but with this, looks like there is a shift from climate-only standards to more broader sustainability coverage, which should be welcomed by market investors, financial markets in general. So with all this, I think 2026 is going to be an year to keep an eye out for with respect to international standards. It's going to be an important year. So that is where we are with respect to ISSP. But Tonia, where do you think are the data gaps primarily, and what would the investors be focused on as we move into 2026?
Yeah, sure. So even before this simplification initiative in the EU, the core gap has always been we can write narratives, but can we quantify decision useful impacts and financial effects for sustainability related factors? And across the board, climate is widely treated as material, but many disclosures are still narrative heavy. And companies describe risk strategy targets, but too often they stop short of quantifying what that means for CapEx plans, asset useful lives, insurance costs, revenue sensitivity, or cost inflation, for example. And even where metrics exist, they're not consistently connected to financial planning. Also, there are some underreported areas such as biodiversity and ecosystems, water, human rights. So here, reporting often sits at the policy level, meaning the statements of commitments, governance statements, and high-level risk description. So what's frequently missing is robust measurement, clear reporting boundaries, comparable indicators, and credible quantification of the actual impacts and dependencies. And looking ahead to 2026, I expect investor focus will evolve around the following four themes. So, number one, materiality discipline. So basically, don't tell me everything, but show me your KPIs, your governance, and why these topics are considered decision useful. Investors will reward prioritization and clarity and will challenge the boilerplate language increasingly. Number two, scope three and value chain assessments. So scope three remains one of the biggest data and credibility gaps. I would expect the um, pressure for transparent methods and quality data, especially where value chain emissions drive the transition story and where regulation does not deliver on that required transparency. Number three, physical risk assessments and financial effects. So the market is now moving from do you assess physical risks to what does it do to your assets, supply chains, operating costs, and CapEx timing? I would expect rising scrutiny around the hazard coverage, asset location granularity, and the adaptation actions as well. And last but definitely not the least, investors will increasingly look for plans, climate transition plans that are more than ambition. So which would include clear milestones, CapEx alignment, dependencies, governance, and evidence of execution of that strategy and planning. So, Shubha, what's your take on the implications for financial markets of all these reporting developments?
Um, yeah, definitely. Of course, there are going to be a lot of implications for the markets. I think regulatory complexity is going to persist in 2026. And as such, because of that, investor judgment, peer benchmarking, those are the things which would become significant. In EU, with respect to CSRD, like you mentioned, peer sets could be patchy still, time series data could be noisy. So there is a complexity which one needs to navigate through. But once we are past this complexity, I do think that the regulation offers very good insight into the corporate sustainability plans, their capital allocation. With respect to ISSP, like we spoke, it's fast becoming a global baseline for sustainability disclosures. And as such, investors, companies, they need to be well prepared for wider adoption, deeper integration, and then growing expectation around decision useful sustainability data. In the long run, I do think like we mentioned, the regulations are going to have a very strong impact on market because they're going to sort of enhance transparency, reduce information asymmetry. Investors are they're going to be able to more accurately assess risk and performance both. And as such, there would be a strong implication both on the access to capital and the cost of capital. With this, we would close this discussion out. Thank you, everybody, for listening. Like we mentioned, this is a mini series that we are doing, and there are the podcasts available on important topics like nature, EU bonds, regulations one, which we have currently done, and climate adaptation. Please tune in to listen to them, and we hugely welcome any feedback. Thank you, everyone.